Alright, so welcome to this video tutorials where I'm going to show you how to execute a trade using the liquidity sweep entry model strategy. Okay, so just for the sake of recap, how does the liquidity sweep entry model occur? Let me just show you for illustration's sake. Let's assume we have a downtrend. This is it. We have a downtrend progress: lower low, lower high, lower low, lower high, lower low, higher high. This is where the change of character has occurred, right? This is where the change of character occur. So after the change of character, this is a sign of weakness and an indication that this downtrend is about to change to an uptrend, right? But then before this trend is going to continue upwards, the market needs to come down, clear liquidity before it goes up. So that is what gave idea to the liquidity sweep entry model, right? So I'm expecting this price to do something, because this is where the liquidity is now, right? So I'm expecting the price to come down here, clear this liquidity, trigger my point of interest here before it goes up, right? So following this entry model now, our entry point needs to be an order block that is slightly below this particular place. So that is why the trading strategy goes like this. So you now say this is your liquidity, right? This is our liquidity, and our entry model is going to be slightly below the liquidity. So I'm trying to long the market now. You can see that I'm doing this even before the market came down there. I'm already taking my position. Why? Because I already have the knowledge that the market will most likely come down to clear. Now you can see the market has cleared liquidity, triggered my entry, and now it is up for an uptrend. So this is exactly how the liquidity entry model works. So I'm just going to go on the real chart and show you a clear illustration, right? So let's go. And so this is the market structure now. So first of all, let us try and see if we can study the market structure. So I'm going to try and study this market structure right here to see if I can see because first of all, the idea of trading is you need to first of all be able to identify your market structure. Then once you identify your market structure, you pinpoint where the liquidity is, and then you take your entry, right? So the first step that you're going to use in order for you to implement the liquidity sweep entry model is to first of all identify your market structure, right? So go with me as I show you the market structure, right? So let's say this is where the market started from here. This is more like a downtrend. So let us analyze to see if we get a buying opportunity. So from here, the market went as low as this particular point, and then from here it's pumped up again to this particular point, and then from here we had another downtrend again, and then from this downtrend we had the market went up and broke the previous lower high, causing a change of character at exactly this spot here. So this is where we have our first change of character, right? So now after the change of character now, for example, look at this part, look at the entry, look at this chart, compare it with the one above. After the change of character, right, you're going to see that we're expecting the market to come down and clear liquidity. So if this is where the liquidity is in this particular case here, it means in this particular case here, it means that this is where the liquidity is for this particular one. So let's just go and see. So coming here, it means this is where our liquidity is. Alright, so this is where our liquidity is. So this is a trend line liquidity, right? So I'm going to, so meaning by my entry or my point of interest has to be below this particular place. So I'm going to come and make reference to this particular area here. There's anything here to find a favorable order block I can use as my entry, because I'm expecting the price to come down, clear this liquidity, mitigate my point of interest, and go to the upside, right? So let's go now. Right, so stay with me. So now I'm looking at this particular place, and what will now be in my favor, since I know now my entry has to be below this particular liquidity, because of course the market needs to come down, mitigate the liquidity before it goes up. So now this is most likely where I'm going to analyze to see if I can get a favorable entry point. So just looking at this particular chart now, I can see what we call the fair value gap, right? So I already explained to you what the fair value gap is. If you don't know about fair value gap, I will recommend you go and watch the video. So there's a fair value gap here. Look, those of us that know what the fair value gap is, there's a fair value gap around this particular place, right? Look at it. The idea is that the market, the week, you can see that this week, the week here and here, it's created a space here. Just look at it. Just let me try to observe it for a while. You can see the space there, right? So that space is what we call the fair value gap, and the market, and we call it the inefficiency, and the market will always want to come down and clear inefficiency. So this is my point of interest, because fair value gap can be used as point of interest. Where you did not see an order block, a fair value gap can be used as a point of interest. So having done this, I'm just going to bring my long position tool and place it here, or probably go on my exchange and place my order, right? So I'm going to put my fixed stop loss of 2%. Those of you that are very conversant with me know that I use a stop loss of a fixed stop loss of 2%. All right, so this is it, and I'm going to put my target just above this high, or probably a bit above it, and let's see how it goes. Okay, so stay with me, guys. I'm sorry. Okay, sorry about that. All right, so this is where I'm going to pick my entry from. All right, because I'm going to put my entry above here, and then let's see how it goes. All right, this is the liquidity sweep entry model, so I'm going to show you the illustration here first before the market plays out. Okay, so this is exactly how I did it here. From here we have the market went down, created a lower low, lower high, lower low. In fact, even did lower low here, a lower here, a lower low here, and then we have a change of character. So right after the change of character, based on what I'm saying, I'm expecting the market to come down like this, trigger my entry, and then boom. So this is exactly what I'm expecting to see in the market here. All right, so you can see that I already have my liquidity sweep entry model here. This is my liquidity, this is my liquidity, and this is the process at which the liquidity has been swept. Right, of course, I explained what liquidity is. Liquidity is just like money. Look at the market was reversing back here. The market, there was a pool of buy orders that was causing the market to go up at this particular point. A pool of orders there causing the market to go up at this particular point. So the market wants to go up and clear this up liquidity here, but then it needs another force now. So the only way it can gather enough force to go back is to clear the liquidity that is below here. So there's a lot of orders here that would most likely sponsor the price to go up here. It's just like when you're traveling in your car, moving from point A to point B. You know, for the car to move from Abuja to Lagos, for instance, the car needs a lot of fuel. So now we're expecting this market to come down here and go up here, right? But before the market will come down and go up now, it needs to first of all come and buy fuel. So from the illustration now, liquidity is just like the fuel of the market. So liquidity is resting just above here, alright? That's why we use this particular line to indicate the liquidity. Alright, so meaning that this market now is going to come down, clear this liquidity, or pack the liquidity, pack the fuel before it goes up. Alright, so without wasting so much time, let's just see how it plays out, right? Okay, you can see how it's playing out, right? Oh, okay, let's see. It's playing out. I just want to. It's playing out. You can see. All right, perfect. Okay, let it. Okay, I think this has already hit TP, right? But then just for the sake of illustration, perfect. Right, so you can see that we finally hit take profit. Of course, you don't just expect the market to go up in a straight line. All right, you can see that in the textbook illustration would show that the market will go up in a straight line, but you can see that the market actually respected what I did here. I said the market was going to come and bounce here and go up. Forget about the fact that the market was doing a lot of up and down, up and down. Like I told you, we don't expect the market to go up in a straight line, right? So we're expecting the market to do its thing, right? That's why you see we're able to catch it and then we close the trade here. I think this trade will last for, let me see how many days it lasted for before we got to final take profit. So it lasted for about, let's say, 6 days. All right, so 6 days is a worthy profit, and then how many profits? 5% profit. So it's actually a good one. I hope this makes sense to you. I'll still show more illustrations so you could get better understanding. All right, so send me a DM if you have any question. Thank you.